What's going on, guys? Welcome back to another video. So today's episode number 7 of the Macro Monday series. So in this video, I'm going to be covering this week's data. I'm going to be updating last week's video and also running through some possible trade setups that I do like to end the year off. This is probably my last trading week of the year. So let's try and have a good week. Without further ado, let's jump into the video. Right, to start things off, the Bank of Japan cannot make up their mind at all. This whole year, trading the yen has been a very painful trade. I definitely label it as a pain trade because I have had a similar bias all year, but the narrative's just not sticking. Already when we had a new governor, when Ueda stepped in and actually kicked Kuroda out, I thought, all right, in terms of politics, it is often known that a new political person coming into power always wants to change things quick and fast. And I thought that was going to be a change in regime. Long story be short, 6 months later, we're still in the exact same position. The Bank of Japan on Friday announced that they would possibly be considering raising rates in December, coming out of negative territory. But it looks like this morning that changed, right? It looks like this morning that changed, suggesting that that might not be needed. It might not yet be needed to come out of negative territory, and the yen got hit today. So I'm going to be covering that on the charts. Also this week, we have FOMC, Bank of England and the ECB, along with US inflation. So that's set to be a very busy one. So straight to the charts. We'll quickly run through dollar, where we are. We're trading at 104. 104 was a price point of interest for me last week. We were buying dips on dollar. Dollar came straight into 103.50, a beautiful little level there for me. Firstly, starting on the weekly time frame, it's good to see where we are. It's good to understand why we are where we are, but also just to cover how the markets shift, right? How the markets already shift. In 2024 alone, there is already over 4 interest rate cuts priced in for the Fed. Now, this week, Wednesday, we have the dot plot getting released from the Fed. So that gives the Fed a chance to change those expectations. As I have said multiple times before, dollar trades is the alternative. Dollar is that world global reserve currency, and you want to try and keep that in mind, right? If you have a sell-off in anything and everything, you have dollar, and dollar is that key, right? Dollar is that key. If there's outflows in something, you're going to have that equal but opposite move in dollar. So I remain a dollar bull. Depending obviously on what happens with the FOMC this week, I still expect Powell to have more of an aggressive and more of a hawkish stance because nothing's changed, right? Despite there being small cracks in the labor market. How do I know that? This past week, we had the JOLTS figure coming out at 8.5 million vacancies. Now, over the past few months, that has been one of Powell's key references, suggesting that the labor market remains firm. Nothing's changed, right? Their path to getting inflation down to 2% is still the same. That they have to keep rates higher for longer. And that whole narrative has slowly started to shift now that inflation's cooling. You've seen equities go on a massive run to the upside. You've seen crypto accelerate to the upside, all because of a change in stance from market expectations. So Fed Chair Powell has a chance to rewrite that this week. Obviously, we know their main concern is their dual mandate. That of price stability, which is inflation, stable inflation, and maximum employment. Right, we had some strong numbers out on Friday's NFP, obviously suggesting that even if, right, there is cracks in the amount of job vacancies, people are still employed. Right, and if people are employed, that's the bedrock of any economy. If people are employed, they're gonna spend. If they're gonna spend, those businesses where they're spending are gonna have that revenue. If they have that revenue, they can continue hiring. That growth is there. That's what Powell needs. That's what any central bank needs. So looking at dollar, we obviously have the inflation expectations on Tuesday set at 4% year over year. Now, for me personally, I really got to think about, where I'm standing on that. I still want to be buying dollar dips, but I got to remind myself that there may be that surprise to the downside. If there is that surprise and shock to the downside on CPI, it may throw dollar off, but then it gives Powell that opportunity to step in on Wednesday, and we can possibly buy dollar dips once again. So looking at it from a technical perspective, we've obviously bounced and we've reversed nicely out of 103. 103 was an area that we drew on last week. And also for myself, we were buying dips during the week. That was in the form of selling rallies in euro dollar, cable, Aussie, Kiwi, right? Buying dips in dollar CAD. So we're going to be looking at that shortly. Looking at dollar there, just so we can round this up and carry on with the rest of the video. 103.50 got bought last week. Go ahead and fib that from the low to the high. Nice little rejection out of the 61.8 area. I'm expecting the same thing. Why do I say that? 104 is such a strong level. I wouldn't want to be a buyer at 104. Now, the mindset that I have with positioning into markets is that if I didn't trade for 6 straight months and I turned up to the markets today and I actually looked at what was going on, I want to ask myself, where would I position myself? Would I be buying dollar from 104 or would I be looking to buy from a better price? If I still see dollar trading higher in the next couple of weeks into the new year, where can I position myself? So 103.50 still happens to be that price. I'll go ahead and draw a bigger range on for everyone. If we can come back into this area, right, I'll even change the color of it. If we can come back into this little yellow/golden zone, I wouldn't mind buying dollar again. And that will be in the form of really taking advantage of euro. Right, euro, I've wanted euro throughout the whole month of December. Well, the whole month, we're only, 11 days in. I thought it was 10. We're 11 days in. And I've wanted euro to the downside. Right, there's already 150 basis points worth of rate cuts for the ECB going into next year. You've got a cold winter coming in, as I mentioned last week's video. You've got a very cold winter coming for the Eurozone. Right, you've got rates that shouldn't be at these levels. You've got a struggling Eurozone economy that no longer has the UK, right, because of Brexit. You've got France and Germany, two biggest contributors to the Eurozone. You've got ongoing wars in Europe. It's going to be a cold winter. It's going to be a really cold winter. So I would have liked to sell any rallies on the euro. We didn't have that opportunity. So looking at this on the daily then, we've had that move out the high. We've had that move out the high, but then we want to ask ourselves, all right, fine. If we miss this move, let's go back to what I said previously. Had you not traded for 6 straight months and you just looked at the market today, how would you position yourself? Okay, you may want euro back to 105, 104. Because you're a dollar bull going into the new year. ECB rate cuts. Fed are going to remain higher for longer, more than likely. Right? So in terms of interest rate differentials, Fed is leading the ECB. Carry on shorting euro. No problem. Where would you position yourself though? So 109 still has to be that price. Still happens to be that price for me. I'm not going to sell into 107.50. 107.50 was downside targets. Right? That's smashed. So if you took that last week, good job. I didn't, right? I wanted 109.50. So I was being a bit of a hard ass looking for a better price. But that discipline pays overall long term. I would have liked 109, but we didn't get it. So I'm going to put that price back on my board. If I can have 109 at any time, be that now, be that later in the week, be that next year, if I can see 109, I'd like to get short. Right, I'd like to get short. So go ahead and fib that from the high to the low, should you wish. That lines up nicely with 109 on euro dollar. Aussie, something I covered this morning on my live calls. I favor selling any rallies on the Aussie. This then runs in line with me being a dollar bull, me favoring risk off, as I really do think the Fed are going to have a chance to tie in expectations into this week's event. Looking at cable, very similar bias to that of euro dollar. When we were trading at around this level of support of 126, I favor to move higher than lower, but we head straight lower, right? We head straight lower. The Bank of England have a tough time on their hands, folks. They are scheduled to have a meeting this week as well, this week, Thursday. Very, very busy week. And they expected to pause, right? They expected to pause rates. Same thing with the ECB, same thing with the Fed. Everyone's beating the same drum as the Fed. They're remaining data dependent. Obviously, yeah, in the UK, they can't afford to raise rates much higher than they are right now. So it may be a case of pausing where they are, seeing how markets react, seeing how the housing market does. Right, there's a big bubble, yeah. It's coming, it's pending. And yeah, we'll have to see what happens with that. But I'm still bearish on cable. I'd like to sell any rallies. Very similar bias to that of Euro, that of the Aussie. And then later on Thursday, we have the ECB. ECB expected to pause rates. You know how bearish I am on the Euro, how dovish I am for the ECB. So same bias stands. Selling any rallies on the Euro. Alternatively, if following what could be a hawkish Powell presser on Wednesday, FOMC meeting, and I'm looking to buy into that dollar strength, meaning selling into Euro. If we do just crack from where we are, right, if we crack 107.50, sort of jump on the back of that, right, we'll just try and jump on the back of that intraday. What would that look like to you as a trader? Anything into 107.50, going to the 40 or 50 pip stop, nothing more. Consider your size this time of the year because volume will be thinner. I'm going to speak about that to the end of the call. And then, yeah, 106.50 would be a perfect place to target. Looking at about 100 pips, right? Break, retest, jump on the back of it. Then that'd be it, really. Briefly to cover the yen pairs. So last week we had this very, very large move in the yen. You know, same thing. It's been a bit of a damn squid for me the past couple of weeks because I've always wanted a correction before that continuation, but I haven't had it, especially in euro and pound yen. I've been mentioning in my mentorship every day that I want these rallies to sell, but those rallies haven't really presented themselves. So it is okay. It is going to happen, but we've got to just focus on the very next trade. So looking at pound yen, at the time we were trading into 185, right? Very, very big level 185. I favored any rally to sell it, right? I expected a bit of a change in stance from the Bank of Japan. It came immediately, right? Or it didn't come immediately. Just the headlines came immediately, suggesting that they wanted to get out of negative territory. If they had gotten out of negative territory, boy oh boy, we would have had, I'm talking a 1,000 pip move, 2,000 pip move on pound yen to the downside. So looking at it overall, going into the new year, you know, should the Fed, they've already paused. Do they have another hike? Maybe 25 basis points, right? Maybe another 25 basis point hike. Are they done into next year? I think so. Right, I think so. I don't see them going, you know, higher than what we are now. I think they're fairly restricted where they are. I think it is enough to tighten financial conditions. I do then also think you're going to have a lot of credit issues into the new year. If that's the case, the Fed could be cutting as early as March, April. If that's the case, and we have a change in stance from the Bank of Japan, the yen cross shorts is going to be perfect for 2024. We've got to wait for the right time. This has been a very painful trade, right? The bias doesn't stick for very long. So if you're taking advantage of these quick moves, you got to lock in gains ASAP. I had originally thought about this bias on Friday to take advantage of the short should it come back into that area, but I decided not to. Obviously, changing the headline, changing the sentiment. There's no point in me going against that. So I'm going to leave this alone for now. If we have any rally higher, I'll consider it into the new year. But other than that, for now, just Euro and the Aussie. Euro, Aussie cable. Obviously, that runs in line with me being a dollar bull. If, however, folks, we have a dovish FOMC meeting, expect dollar to get sold. Expect dollar to get sold. Expect 103. Expect 102.50 to break. I want to prepare you for both outcomes. The reality is we can prepare for both sides. But as a trader, you need to be able to manage your expectations on both. The analyst half of your brain is going to go ahead and review the data like we've just done. Choose a bias, right? You're going to need to relay that information to the trader half of your brain, which will need to primarily manage your risk, right? Use that information that you've now given yourself. Trade the market. But if it doesn't go in line with your expectation, don't just trade it anyways. Don't go ahead then and risk everything for the sake of it. Right? Try and keep that in mind. But folks, just a quick reminder, we are approaching the end of the year. So this will be physically my last week of the year. I don't see myself trading into next week. If there is something small, possibly on the Euro, possibly on the Aussie, maybe. But obviously in line with what we've spoken about today. If there's nothing else into next week, I'll wrap up my books, call it a year, and obviously come fresh back into it the next year. But this will be the last macro Monday of the year. I understood I took a break from it for quite a while. Life just gets carried away. Trading, managing a community, doing content. it actually takes a lot of energy. So for those actually doing it out there, shout out to you. But I will be bringing, to the best of my ability, Macro Mondays back in 2024. I'm going to be providing a lot more content in my free Telegram. So check out the link down below. And also, if you want to go ahead and follow me on Twitter, I'm going to be a lot more active on Twitter. But enough about what I want to do, what I could do. I'll see you in 2024. Wish you all the very best for all your families and your friends. Have a safe festive season. And let's pray for world peace. We need peace in 2024. So see you guys in 2024. Take care. Bye-bye for now.